Okay, it should work now. Okay, perfect. And I'm going to post the link to everyone. Hey guys, welcome back. Welcome. Sorry about that. It was very interesting. Can everyone hear me? I just want to confirm that the audio works correctly. Is the audio crystal clear? Okay, very interesting situation. So I was on stream and I was speaking, and you weren't able to hear me. And then I looked into the actual advanced settings for the computer diagnostics I was running, and it said that the wallet, the Arweave wallet, was using my microphone. I'm a little like flabbergasted, to be completely honest with you. I've never heard of a wallet needing to have access to your microphone, which is very strange to me. Also, the fact that I removed that Arweave wallet a long time ago because it was no longer supported in the Chrome browser extension library. So it's very strange. I've never seen that before. So my microphone was controlled by the Arweave wallet somehow, and it was superseding control on YouTube Live. I don't know. It's very weird. I'm like really thrown off by it. I'm good. I'm good. Tax recovery. How are you doing, brother? Everything's good. All right. I think we probably just get started. So for everyone, we basically have the thread. We have like so many questions to go through. So please just go ahead and ask anything you want in the thread, or just post it right to the chat. Happy to help. But yeah, let's get started. So, what I'm thinking I can do is I can probably just share my views on the market and like what I think things are going to look like going into the future. And Tony, what's up, brother? So I really don't feel like I'm that excited about Bitcoin just until we close the weekly above 65,000. Like that's, to me, has been like the level that I've been following for a really long time, and it's something that's very important, such a critical level to break, because if we don't break it, and you saw what Alex wrote as well, Crypto Hunter, what he wrote just a few hours ago, is exactly what I see, right? So we have our own methods and techniques and our approaches and how we view the market, but ultimately many of the same conclusions, right? So Wolf, welcome back, brother. Thank you for staying up late, man. We'll try to make this short and concise and to the point, and we'll hopefully get to everyone's questions. But I'm trying to just provide like a very honest, unadulterated, unfiltered, unbiased perspective on the market. And the way I see things right now is we really do need to have a definitive close on the weekly, and preferably even on the bi-weekly, above 65,000, because exactly what I mentioned to you before is since the March warnings that we put out and how the market was incredibly overbought and stretched, we've just been securing lower highs and lower lows. Okay. And every time I feel like, okay, we've potentially set a new local low, we have a newer low, right? Now, if we break above 65,000 and we clear above 68 to 70,000, then I think we definitely have an argument to make that we can finally discontinue this lower high and lower low trend that we've been on for the last 6+ months, and flip back a lot more bullish on Bitcoin, at least denominated in USD terms, right? So that's my view. So my view has been it's facing a huge amount of resistance at 65,000. I mean, there's no question about it. You can see that in every technical, analytical, view that you can slice and dice. But no matter what view you look at, no matter what time period, you're in this path, right? It's very clear upwards path since the first week of September. So you see that on the weekly, you see that on the daily, you see that on the 12-hour, you see that on the 8-hour, the 6-hour, the 4-hour, and I was really hoping we were going to maintain and hold this support level, and we did, right? So we held 63,000, which is good. So that's excellent. But what I don't want to happen, and this is my concern, is what I don't want to happen is for us to just keep going in this type of pattern where we'll go up a little bit and then we'll get rejected and then we break below this trend. And if we break below this trend, that's been really a clear defined upwards channel since September 7th. If we break below it, then to me, that's just a continuation of the 6-month downtrend, right? And the more important thing that I want to bring your attention to is exactly what I had mentioned last week or the last stream, is my concern is that every time in the last 6 months that we've attempted a break of a key resistance level 1 and a key resistance level 2, and for me, my levels are 65, 68, 70. Those are like the 3 main levels that I'm looking at and tracking closely right now, right? Every single time that we attempt to break that level, we get rejected. And we get rejected in a very clear, defined way. And what I am curious about is whether or not we're going to get rejected again for the 5th time, or are we going to potentially have a sustained breakthrough and actually clear these high levels, right? Because in the last 6 months, we tried in May, we got rejected. We tried again in June, got rejected. July, got rejected. August, got rejected. We're exactly at that same level. And with each subsequent rejection, we have a weakening of the trend. We have decreasing volume. We have Bitcoin outflows that rapidly accelerate. We have worsening economic conditions. And we have people's realization that altcoins are obviously not going to hold their value, at least in Bitcoin value and even in USD value. And people are just capitulating and surrendering, and they're just, they don't want to just have so much exposure to altcoins, right? And that's why I'm like trepidatious. That's why I'm very calculated with what I'm saying, because I'm sharing exactly how I'm seeing this market. I'm trying to just give you a clear perspective, right? I'm not trying to just be contrarian for contrarian's sake. Like, I'm trying to give you a clear perspective on how I'm seeing the market and how I'm reading it. I just don't want this to be the 5th rejection. You could say potentially that we already broke 65,000, but is this just a weekly wick, or is this an actual definitive close, right? So that's what I'm seeing. Now, another thing that is, I think, very good for potential continuation for the next few weeks is when you look at others Bitcoin. So again, this is like very important for me to look at, because this gives me the earliest possible indication of a potential breakout in terms of altcoins relative to Bitcoin, is this one metric alone, right? Because if this rises, so if you're seeing this rise, that means altcoins are outperforming Bitcoin, which means that you can probably be a little bit riskier than you usually are, right? And you can see that we broke some important levels, right? We broke this level and we broke this level around, so we broke 0.16, we broke 0.18. So these are important levels. But then, we're very likely going to hit some resistance at 0.19, right? And that's just what we've done in the past. So it's not just, this, there was also quite a bit of historical resistance at this level. And there's a track record of being rejected around there, right? And if we do get rejected, are we in fact going to go down? If we do go down, because both of my targets have been hit for this, I mentioned that many times, but are we going to go down to 0.12? And is that the potential bottom for altcoins? And is that when we really want to be aggressively accumulating? So I'm waiting. So I don't want to get ahead of myself. I don't want to just make promises and just say, okay, this is what's happening. I just want to share exactly what I'm seeing. And that's exactly what I'm seeing, is that we broke two very important resistance levels. We've closed the weekly on both of them. And now we're fast approaching another important level. This could be potential conclusion of this little relief rally that we're hitting here. Because when I'm looking at altcoins, I'm still seeing them. I still see them as fairly weak. I mean, because when I look at Bitcoin dominance and I'm looking at it on a weekly basis, it's very much approaching my level of 60 to 65. And we're close, right? And we're close. So I still think there's another sort of wipeout that's left. I still believe that there's going to be another flush out. That's my expectation, but I obviously reserve the right to change it. But I feel like that's my expectation, and those are the levels that I've set from 2 years ago, and I'm sticking by them because the general thesis has been correct, and all the other metrics have not failed me. Because the low in Bitcoin dominance was 36% back in 2018. Then the low back in 2021 was around 39%. But the high went from 98 to 73. I don't think we're going to go hit 73 again, but I definitely think we're going to be between 50 and 70, and very likely between 60 and 65. That's my expectation. And I would feel a lot more confident buying altcoins more aggressively when I feel like the market's healthier. To me, the market right now is 100 times healthier than it was 6 months ago, right? This is why I was yelling from the mountaintops that you should restructure your portfolio and de-risk and take the right steps to make sure that you're protecting your profit back in March and late February and March, because most altcoins are down 99%. I mean, and I've shown this in the project analysis channel that we created, right? And this basically shows 3 projects that I've highlighted just to get things started. And so one of them, for example, Everclear, right? Its market cap is literally only 12 million. The other one's only 5 million. This is a fundamentally strong project with a strong docs team, with an entire plethora of products and services that are actually functional, active, thriving community, strong backers, strong deal flow, and researchers and scientists who've already screened it, vetted it, approved it, and felt that it was worth backing, and at much higher valuations, right? At valuations close to 100 million. And now that it's been devalued 99%, it's 10 times more attractive, right, for me to look at than looking at some random speculative meme coin that's been listed on Dex Screener or some AI coin promising to create the next Bloomberg terminal, which literally I feel like my team can create in a weekend if we really we're determined on just exploiting people and trying to rug pull them, right? And I just don't. To me, if projects like these are down 99% compared to where they were in March, to me, okay, that's good. That to me in the long run is a good thing. It's a good thing for the crypto market because Bitcoin dominance has gone up and Bitcoin's market share is higher. So which is the right thing, right? You shouldn't be having altcoins control 60% of the market. That doesn't make any sense. So To me, this is very good. Overall trending right. This is trending in the right direction. And I believe it's going to keep going. Um, and then the same thing when I look at Bitcoin, to me, this metric is probably even more important. This is for Bitcoin dominance, excluding stablecoins. So it just really allows you to see a clear view. So I think you all have a fairly good idea of how I like to look at things now. But another thing is when I look at stablecoins, I want to show this very clearly because this metric is just so incredibly useful for me. Um, this shows me stablecoin dominance. And what this allows me to see is that since the market top at 73,000 back in March, stablecoin dominance has gone up from essentially 3% all the way up to 8, almost 9, actually 9%. So it hit my target zone 2 weeks early, but right at the absolute bottom, a part of it. But it's been in a clear upwards range here. You can see it. And every time that it's hit the bottom of this range, it's bounced. And when it's bounced, altcoins got completely wiped out, right? Because people were flying to the safety and stability of stablecoins, right? That's the whole premise of this metric, right? And it's incredibly useful because every time that it trends higher, altcoins don't do well. So what we would ideally like to see, if you're an altcoin bull, we're all altcoin bulls, but I want to be realistic with what I'm projecting. But if this level holds, then I don't see altcoins exploding for the next few months. Like I don't. You know, you're gonna see some, but just statistically, mathematically, it's very unlikely that altcoins as a whole are gonna outperform Bitcoin if stablecoin dominance continues to rise. So now I'm waiting. I want to see whether or not it's going to break this level. If it breaks 7 and it goes right back to 3, then yeah, of course, it's absolutely possible that we're going to have a little mini altcoin relief rally. And that was one of the scenarios that we had anticipated and we planned for, right? Um, but we just have to see. So that's why I don't want to try to just guess what's going to happen, because right now on the daily, see, we've really respected these levels so consistently since March. And it's just 6 out of 6 times we've hit resistance, and we've had a little bit of an altcoin relief rally every time. But then the larger, longer term trend has continued. So that's my point with this. This is why, and then you're also seeing like it's potentially entering oversold territory. Oversold in this case is an example of when altcoins go higher, then stablecoin dominance will go lower. Of course, right? It's they're inversely correlated for the most part, and that's where we are right now, right? So we're entering oversold territory. When I look at the relative strength, when I look at the actual momentum itself, we're below zero. We're all the way at like minus 150%. And in the past, that has marked a reversal point. And when the market reverses, altcoins don't do well. So I'm just, I can debate this anytime you like, but I let the data guide me, right? I'm an empiricist, right? I look at this scientifically and I'm like, the data is very clearly telling me that in the past 4 situations that we've been here, altcoins have not done well. So, but let's enjoy it for as long as we can. So if it respects it, not good for altcoins. If it breaks below it, that's very good for altcoins for the next few weeks, I would say. So just keep an eye on it, and whenever you want an update on it, just please ask, and I'll always review it. Now, my other views is I like that when I was talking about Doge, I like that we just keep hitting this support level, and that's good. And now we've potentially broken out of it. It's too early to say. It's just way too early to say whether or not we're going to have a sustained breakout on Doge, or we're going to have this like massive, 6-week run up like we did back in February and March. Sol Bitcoin, I think, is clearly a lot stronger than Doge, I would say. I mean, there's no question about it whatsoever. But Doge doesn't really move until Bitcoin like flirts with its all-time high, and then outperforms it by a multiple of 10 or 20 or 30x, you know? So I would just keep an eye on this. And then ETH Bitcoin had just been in an absolute bloody downtrend, which is this is exactly what we expected. So this should not be, you know, a surprise for everyone, because third time, I mean, it's just like clockwork. And we talked through this. It was usually the fourth time it touches its key support, then it breaks and you have the final capitulation, and it's happened every time. This time it was the fifth time, right? We had this initial breakdown, but then this time we set new lows. We're right at the midpoint of my main terminal target, which is going all the way down to 0.035, but maybe we never hit that. Maybe we bottomed at 0.03. It was like 0.038. To me, I'm mostly satisfied with this, right? I can see us potentially double bottoming later in a few months, but I'm mostly satisfied with this metric. I'm just not satisfied with Bitcoin dominance. I'm not satisfied with stablecoin dominance. I would like for stablecoin dominance to be higher and to be 9% and above before I'm a lot more aggressive with altcoins. I feel very sufficiently exposed to altcoins, so that's, you know, those are my views. Okay, so now let me answer any questions from the chat. Just please ask. I'm happy to help. So, okay, so there's questions about hypothetical scenarios that might play out over the next 12 to 18 months, and how would you manage your portfolio accordingly? Also, I noticed some members, myself included, are still treating the crypto portfolio like this is 2020, getting ready for another bull market. I think this idea is flawed because the crypto market is so different from what it was back in 2021. Where is the significant difference between the previous 4-year cycles and now, and what are the similarities? Honestly, I see more similarities than anything. I mean, this is, and I feel like I've shown that. This is exactly what's happened in the past. Is you have Bitcoin leading the pack, and then you have Ethereum following, and then you have altcoins outperforming Ethereum and outperforming Bitcoin. Then you have Bitcoin reclaiming control, running to an all-time high. Then you have altcoins having some type of parabolic advance and explosive break of their all-time highs, and where the top is like impossible to predict, but you generally know, like after 20, 30x of like the top 100 coins, you know that that's near the top. And then you see Bitcoin capitulating, you see altcoins capitulating at an even, you know, faster rate. And then you have a 50 to, you know, you have a 50% breakdown like Bitcoin, and you know that around 75, 80%, that's pretty much the market cycle bottom, right? And then you go through like a 12-month altcoin bear market, and then you have like a relief pump that happens usually like around the same time that there's a halving, and then you have a clean out and like a flush out of the alts, and that's exactly where we're at right now. Like there's no actual measurable difference from where we were in past cycles, because I mean, I just showed you the second most capitalized and valued project in crypto is Ethereum, and that's why it's important to track its trends, right? And it really does, it really has the same ebbs and flows. It's like it has a massive capitulation, and then right at the end of the capitulation marks the opportune time to accumulate alts, and the best time to be a lot more speculative on small caps and micro caps and anything really less than 100 million. My focus is 10 million and below, and that's like my sweet spot, and that's the spot where I like to focus the majority of my time and research on. And most altcoins, as you've seen right now, are down 99% right at these points, right? When Ethereum is like basically rock bottom compared to Bitcoin. When people have just given up on Ethereum, then they've absolutely given up on altcoins, right? And that's the best time to start accumulating and start buying in and start having some exposure to them. That's why I've been posting so much on the project analysis channel, right? Because these three projects I mean, would you rather buy a meme coin or some random AI coin, or would you rather buy a coin that's backed by the Ethereum Foundation, that is backed by Coinbase, that is backed by Kraken, that is backed by FIFA, that's backed by Muhammad Ali Enterprise, that has like the branding and the marketing powerhouses of all venture capitalists and private equity firms, that has fully doxed teams, like grads from like top institutions who have access to top pools of talent, who already know exactly what the right recipe for success is, who've done multiple rounds of funding, who are already well funded, well capitalized, like they have a clear roadmap. They've been building the products for years, and they're valued the same. Like literally, these coins are like at 5 million, 10 million, right? I mean, like Altered State is valued at $5 million. Like, think about that. So, I I would much rather have some exposure to these than have too much exposure to speculative meme coins about some cat or a dog, um, where they don't have a thriving community and they don't have like an established user base. So to me, that's my mindset. That's my perspective, and that's where we're at. We're literally at the stage right now where this is becoming fire sales. I mean, you're seeing fire sales everywhere. So I don't think a lot has changed from back then, because around this time is when Bitcoin dominance explodes. And when Bitcoin dominance explodes, it basically marks the end of, it basically marks the end of the altcoin capitulation. It's around the same time. And then that begins like the next bull market, right? And that's what happened at the end of 2020, right? And that's what happened at the end of 2015 going into 2016, right? So I just don't see that many dissimilarities. I see more similarities, Connor. That's my view on it. So hopefully that answers your question. Um, I don't feel that when Bitcoin breaks its all-time high, and let's say we break 73,000, to me, that's still not the all-time high. I've mentioned this before, and for people who've joined recently, I should explain that my view on the all-time high is actually 79,000, because you have to adjust for inflation. You can't just say, oh, the all-time high was 69,000 back from October 2021, and we just take that at face value and we don't actually account for inflation. Because to me, that's grossly mistaken. That's a negligent view. I think you should absolutely account for the inflation. So of course, like I'll keep saying, yeah, all-time high was 73,500, but the real all-time high is closer to 79,000. And because inflation was at 9%, I mean, you can't go up in inflation by 1,000% and not at least account for that as an important variable to consider. You have to. I mean, it doesn't make any sense, right? You have to account for the most important variable, right? So it's the power of money. Like it affects your purchasing power. So $100 today is worth considerably less than $100 was worth 3 years ago. So how would we not account for the time value of money, right? How could you not account for inflation? So to me, that's why it's important to just take a breath and don't get so caught up in the specifics of, oh, well, we broke an all-time high, and in the past that's always formed like the beginning of a 12-month bull run, and it's always taken us to a 3x above that level. It's just like, just take it easy. Like none of this is a guarantee. there's no guarantee, you know. Like everyone and their cousin was like telling us, oh, it's 73,700, it's going to hit 110,000 next. And the only reason I was incredibly protective and defensive, and why I kept warning everyone, is because of these ratios that I'm looking at. So the ratios have never failed me. I think that's why they just don't. They're so reliable, right? I mean, look at this. So when I look back at others' Bitcoin, and let me try to hide some of this. I look back at others' Bitcoin, and I try to say, when I look at the market top, if you look at the market top here in December 2017, was around 0.32. Okay. Which means that the market cap for altcoins in the top 100 was 32% of the market cap of Bitcoin. Okay. So that's 0.32. So altcoin market cap relative to the market cap of Bitcoin was 32%. So if the market cap of Bitcoin was $100, the market cap of altcoin was $32, right? That's the general gist of it. Now, look how incredibly valuable that one metric was. Like, just, that there's a huge amount of resistance here at 0.32. You just know historically that that's been a very important point for us. And there's also another very important point, which is 0.17. This is why I keep harping on this level, because this level has been relevant for the last, think about this, for the last 7 years. This level has been a critical flip of a resistance to support. Okay. And that's happened back in 2017. It happened back in 2019. It happened back in 2020. And then finally in 2021, we broke that level and we went higher. And then where did we start slowing down? Was 0.32, which was the all-time high in 2018. So just think about that. So clearly, for me, the level that I would be looking at when we break 0.26 or 0.25 would be 0.5. And after 0.5, I would be extremely, even right above 0.4, I'd be extremely defensive, extremely careful, just on this one metric alone, especially when others Bitcoin is above 0.4 and with Bitcoin dominance being, let's say at that point, it's at like 45%, then I would say we are fairly darn close from hitting the market cycle top across the entire sector. And then other metrics that I like to look at too is, like, this metric is very important to me because this shows where are we right now with fundamentally strong projects, right? The most used, the highest capitalized layer 1, layer 2 blockchains are these ones. And right now they're at 23% market dominance, right? These should be valued a lot higher. These should be valued at least above like 28, 29%, for God's sakes, right? It just doesn't make any sense for them to be valued this low, 30, 35%. So this is very close to the bottom, if it's not already the bottom, So this hasn't failed me. And before I had this, I was using just ETH and AVAX and BNB and ADA, right? And then Polkadot was launched, and then I ran Polkadot, and then I added, and then TRX was also there for a long time. So I only have this much because I had to have Sol and Optimism, which were launched after, and then the same thing with Near, right? But hopefully that explains my view on it. And then, there's a question here about, I was wondering where we were in the business phase cycle, specifically for the real estate market. Yeah, I mean, the real estate market. The thing right now is that my views are pretty strong on this, but I think Nvidia, and I've mentioned this many times, Nvidia is extraordinarily overvalued. Like, there's no question in my mind that AI is being blown out of proportions, and it's like textbook Gartner hype cycle, right? I don't know if you've ever seen these, but this hype cycle is so incredibly valuable for you to just look at, because this is exactly where I feel like Bitcoin was, and then where AI is at this point. Because I was using AI before it was even called AI. It was called just pure machine learning. And then it was called data science. And then it morphed and it got bastardized and it got grouped into, artificial intelligence systems, right? And of course they were all artificial intelligence systems, but it's such a catchy term. And that's the thing. So this is exactly what happens with so many technological revolutionary breakthroughs, is you have a trigger, like a ChatGPT, and then you have this peak of inflated expectations where everyone's expecting everyone's job to be completely displaced and removed from these unrealistic, inflated expectations of AI and the power and magnitude of its power. And then you have like this, and then it completely crashes. And this is exactly how I envision. I envision Nvidia going from above 3 trillion market cap to being less than a trillion. And then you have this trough of disillusionment. You have already OpenAI is imploding with 3 of its co-founders leaving as of yesterday. And you only have the founder who's now fundamentally restructured his corporation from nonprofit to profit, which is ridiculous. And as you're seeing all of these things break through, you have a slope of enlightenment and you have a plateau of productivity, and then you essentially have like a much clearer, visible view on like the realistic expectations, right? The non-inflated expectations of the technology. And like this is what's happened time and time and time again. And you can see these hype cycles with all forms of technologies, right? So to me, I think when that bubble pops, the market as a whole is going to be dragged down. Like there's no question in my mind about it. So if I look at equities right now, right? So let me pull up equities. Like let's look at AI coins. Let's look at Nvidia. Nvidia as an example, look how much it's gone up. To me, you cannot have a 200x growth in 10 years for a chipset manufacturer. And I know that they have GPUs, CPUs, and there's virtual processing units as well, which is the future. And like, I know that. Like I'm very familiar with the sector. And but to me, this is not sustainable. You can't be valued at 3+ trillion. Doesn't make any sense. Doesn't make any sense. Like you can already see that overall global adoption of AI tools is not rising at the same rate as it was rising a year ago, right? And some of that is back to these inflated expectations, and as you're seeing the market completely roll over, and people have some time to absorb and process the insignificance of what they experienced, right? They realize, wow, maybe I got ahead of myself here, right? You can see it already with the Apple Vision Pro. Like, I love the Apple Vision Pro, but I'm not going to buy one until it's like version 2, version 3, version 4. It's still another like 2, 3, 5, 10 years until you have complete adoption. It's way ahead of its time, you know? Um, so so those are my views. That's how I see it. But when I look at the market as a whole right now, you can see Nvidia. It scares me because when this bubble pops, you're gonna have to be careful. You don't want to be in a situation where you're just holding this for too long. And then the same thing for Nvidia. Near is one metric I like to track because in the past, when Nvidia outperforms near, it's usually when the crypto market completely collapses, like it did back in June, right? June 2022 with the Three Arrows Capital and the Luna debacle, and then at the end of 2022. So it's like it's very consistent. And then it outperformed near all the way up until October of 2023, and that's when crypto reclaimed the throne and controlled everything, and then you saw this plummet. So when you're seeing this plummet, it means that near completely outperformed Nvidia, and that's when it jumped from $1 to $8, right? And now we're back in a decline, which is good for crypto altcoins, but obviously not good for Nvidia. So I don't. So this is like another metric that I like to track, and then yeah, I mean all of these. I mean these coins, many of them went down. This one went from 1249 to 160, right? And this is like one of the strongest, most well-defined projects in the sector of AI, right? Okay, so let me go back and try to find my my indicators that I wanted to show you. Where is it? There it is. So let me look at You see this too. So when I look at the US dollar index, in the past, this has been such a critical level of support that we've hit. It's around 100. You don't want US dollar to be outperforming the rest of the stable coins. You essentially don't want, or the fiat currencies, you don't want US dollar strength being high, right? Hopefully that's making sense. But you don't want demand for US dollar being high. That's what I'm trying to say. For if you want to be much more speculative on altcoins. So this is obviously more of a multi-week, multi-month metric, but it is very important to track. And we've already hit my level, and that was after the July push-up, and now we're here. So I would be careful. And then when I look at the stock, it's the same thing with the stocks. I mean, this is not, we've had a multiple month run up, and then we have a 2-month clear out, and then we're right back to like a 10-month, 11-month, 12-month run up here, right? We're literally going into our 11th month now of having the S&P 500 on the monthly being green and trending higher with new all-time highs being set. So that makes me a little nervous. But definitely we're in for like at least a 1 to 2 month downturn. I don't think we're going to have another, massive collapsing recession like we did back in February, March, and April. Now, we will definitely, I would say, in the next few years. And I've talked about that at length, and I've gone through all the metrics, and I can go through them again. But that's my view. And the same thing with the NASDAQ. You can't stay at this level for too long without having some kind of pullback, right? And I just would love to see a pullback of NASDAQ and the S&P 500 while crypto wakes up and starts outperforming it. Because right now, when I look at crypto versus stock market, you see, this is what worries me about crypto. Is you really need this to be green. Total is total crypto market cap, and the SPX is the S&P 500, right? Which are the largest, most capitalized 500 publicly traded companies in the US. And you really want this metric to be green if you're going to be very bullish on crypto, because this is one of the most reliable top indicators and also one of the most reliable bottom indicators. Because look, so this marked the top 7 years ago. It marked the bottom 6 years ago. It marked the first top again in 4 years ago. It marked the second top 4 years ago. It marked the top again in March. Think about this. Just think about incredibly reliable this one custom ratio is. Anytime that the crypto market as a whole outperforms the entire S&P 500 equities market, and it seems to roll over, that usually marks the top, right? That has marked the top in the past, and the same thing for marking the bottom. This marked the bottom back at the end of 2022 in December, right? When Bitcoin was at 15,800. So that's my view. So what's the difference between project calling? What's the difference between hunter call like T-Bank and your calls on project? I was just trying to understand, isn't it better just to wait? No, I think so our goal is to find coins that are going to outperform Bitcoin, Ethereum, Solana, and Doge, right? That's the quattro that we're trying to like crush and outperform. And if there's coins that are going to be doing that, and there are coins that be doing that, then we're good at trying to fish those out and identify them, right? It just depends on your risk tolerance. It depends on what your investment timeline is and your horizon. These are good times to accumulate. Like if you're buying in 4 figures, 5 figures, 6 figures, 7 figures, it's a good time to start accumulating a lot of these coins when they're down so much. I mean, when I look at like Connext, for example, it's already down 81%. Now, this is a good time to accumulate, start buying a little bit, Now, of course, there is a very high likelihood, I believe, that we're either going to revisit the low or we're going to go as part of a continued flush out here, right? Because we still haven't broken the larger trend. Like that's the same problem with all the altcoins. They're all suffering the same fate. We still haven't broken any kind of clear, definitive downtrend. And yeah, we can go down further, but it just depends on how much you're looking to buy. Like it's the same thing with all of them. Like this is a very good accumulation zone if you're looking to buy some long term. The same thing with the Octopus network or Omnity network. It's the same thing with Stride, right? These are all down. I mean, how much more do you want to? How much more do you want these to go down before you're looking to accumulate some, or at least prepare yourself to have some exposure to it? I mean, it's down 94%. Yes, it is absolutely likely to go back down to below 40 cents, but I don't. There's no degree of certainty. Like it would be very difficult for me to even put like a actual probability to that. You know, so I would at least consider looking at these projects, doing the research. So yeah, and then I think we view the market. We're always like looking under every rock for every potential undervalued opportunity there, and and that's it, right? And we're doing it through our own like prism, our own views, and yeah. So that's hopefully that answers that question. Um, And then Apple Vision Pro is amazing, but yeah, I'm not getting one for a while. I would like some kind of land for movies. Yeah, it's pretty incredible though. Which is funny because it made my wife nauseous, and she really didn't feel well after using it. It was like a little too much for her. It was like it was too emerging. It was too immersive. It was way too immersive of an experience. All right, now let me go back to the questions. So I got my dad and uncles into some BTC and Ethereum ETFs or crypto. Oh no, the other questions about real estate. So let me show you another metric that I've been tracking that's concerning about real estate. Is what I can do. Just do it like this. Yeah. So problem with what I'm seeing. Let me change this to the weekly. So when people say, "Oh, we're very likely to have a recession," we are, but at the same time, let's take like 2 minutes to look at the actual metrics that I've been mentioning a million times, right? So these are the metrics that are usually used by the National Bureau of Economic Research, and they're the committee that's responsible for classifying recessions. And the way they do it is they determine a market cycle peak and then a market cycle bottom. So they'll say that that's like the apex and that's the trough, right? And like the difference is essentially the time period for a recession, right? But they don't announce the recession until several months after we're already in a recession. Okay, that's the first thing. Second point is, so what type of econometric variables do they use? And the ones they use are these ones. So they use real personal income. They look at total non-farm payrolls. So the number of essentially active employed people in the United States. They look at total consumption. So how much people are actually spending, how much people are actually spending towards food, entertainment, shelter, accommodation, normal expenses. They look at total employment level across the entire labor of statistics, right? So not just non-farm, but the entire employment level. They look at total industrial production. So what is the total output? Like how much is actually being produced? And then they'll look at total gross domestic product, right? So GDP, and then they'll look at gross domestic income. So these are the metrics they track. Now, what worries me about when I look at real estate is when I look at delinquency levels and I look at delinquency rates for commercial real estate loans. And let me add in the recession symbol. I think it's US RECM. Where is it? RECM. Oh, wait. US RE. This. So whenever it's in, let me change this. to orange. Keep it red. So anytime that you're seeing this, that means there was a recession. There's an actual, valid, officially classified, announced recession. So the last recession that we had was back in 2020, and it lasted for 2 months, right? And it was for basically March and April 2020. So in the past, you have an explosion in delinquency rates in commercial real estate. What this means, hopefully this is not confusing anyone. If there's anybody who wants me to explain anything, just please ask. I'm trying my best to explain this as concretely as possible. But what is a delinquency? Delinquency is if you have a loan and you don't pay the loan. And that's one of the earliest indications that you're under financial distress and that families are under stress and they're going to become anxious and depressed and they're going to become very eager to like turn things around. So they'll start changing jobs or they'll start sensing a huge amount of pressure to make things right. And they're going to try to do everything humanly possible. So they're going to start cutting expenses. They're going to start like they're not going to pay their mortgages. They're not going to pay their credit card debt. They're not going to pay any of their loan obligations. They're not going to pay their tax obligations. So those are the metrics that I like to track, right? Like it's right on the absolute forefront of finding like economic alpha. Like that's literally what I'm like obsessed with doing, right? And this is one of the metrics. So when I look at commercial real estate loans, you always have this explosion in delinquency rate or default rates right before the recession. And right now we've already gone from 0.65 to 1.42, and you can see it. Now, is it at high recession highs? No, but still doesn't mean that we can't enter a recession in the next like 3 to 12 months, right? It just doesn't mean that it's going to happen tomorrow, but there's absolutely a possibility that we could have this explode from where it is now, right? 1.42, which was back in January of 2017, was the last time we were ever this high. And it entered a recession in January of 2008. So that was a whole year later. So we could absolutely be in a situation where September of 2025, we're entering a recession. It's a possibility. Now, or what if we have another repeat of 2000, where it took from July 1st of 2020 or of 2000 all the way to Jan 1st or April 2001, right? So that took about 5 months, 6 months. And no, that took even longer. So I think it actually began in April. So you're talking about so you're talking about 9 months after. So that's my hope. My hope is we don't have a recession until we have another microcycle boom in crypto. That's always been my expectation and my hope, and the economic data is backing that. So, and then the same thing for single family mortgages. The reason I'm mentioning this, Cynthia, because you're asking me about real estate, is that whenever you see a high rate of delinquency, you see that leads to a high rate of default, that leads a high rate of foreclosure, that leads to a high rate of short sales. And whenever you have those four, you essentially see the prices of houses go down. If the prices of houses go down, then that's probably a very good time to start buying houses, right? Wouldn't be a good time to buy it yet. You would definitely want to be buying when you have those four things all happen in tandem. And they happen in tandem because it's just logical. When you have less access to capital, you have less access to money, you have decreased income, you have higher expenses, and all of those factors have some weight towards you having a little bit more difficulty managing your finances, right? So DCing and taking position, just being patient, very informative and clear. Really appreciate you. You're very welcome, Tony. My pleasure, brother. Okay. What are some other questions? If there aren't any, I'm gonna keep going through these questions because there's a lot more. So I got my dad and uncles into some Bitcoin and Ethereum ETFs. In crypto was down in 2022. They've done well, but they aren't selling. they're treating their crypto allocations like their S&P 500 allocations. That's good. Does this mean we aren't going to get the kind of alt season like 2020, 2021? Since the TradFi guys are not going to go down the risk curve, the shit coins altogether this cycle? Are we mostly going to be? No, because the way I see it, Andrew, is I'm feeling great because when I look at the issuance of total stable coins, we just broke an all-time high. Okay. We just crushed 160 billion. That means there's 160 billion dollars. Okay. So 5%. But think about that. Even more now at this point. Because the market is entire as 2 trillion, right? So you're talking about almost, it's 7% here, but it's closer to like almost like 8%, 9% of the entire market is free capital of cash. So free circulating stable coins that could be used to prop up and pump the altcoin market. And so you get capital that way. So you have that huge infusion of capital that way, right? That's method one. Method two is through Bitcoin. So we want a lot of the stable coins to be going and rotating into Bitcoin and propping that up as the king of the market, and propping up Solana as the queen of the market alongside Ethereum, and propping up Doge, which is like the crown prince, right, of the meme coin market and everything that's non-utility based. And all of that capital is then eventually going to rotate into higher risk assets. But it needs to, what I would prefer, what I really would like to see, I want this to rise much faster, much higher. Because you see in the past, after the recession, it basically ran from 4 billion all the way up to 140 billion. Right? Think about that. It's like from 4 billion to 140 billion, the stablecoin issuance rose. That's unbelievable, right? I mean, you're talking about, it's incredible, right? You're talking about like well over 30 to 40x. Right now we're at 160 billion. It's good. But where's my 40x, right? Like I want to see a nice 40x with this too. Right? Yeah, like 35x. Like I want to see, I don't want to just see, oh, it's gone from 115 to 160. It's nothing. So, okay, let's just assume that it's 35x. Like you said, it's 35x. Let's assume it's half of that. So we'll go 17 times 160. That means stablecoin is going to go up to 2.7 trillion. Like I don't know if that's possible, but my general expectation was still that we were going to hit 8 to 11 trillion in this next market cycle. And the only way we're ever going to even remotely approach those levels is we need a massive explosion in stablecoin issuance, because this is the fastest and most safest, insured, regulated way to onboard and on-ramp cash from TradFi into crypto. Because anybody who's buying, institutions who are buying, they're going to use stablecoins. I'll give you a real example. I wish I could show you this message, but there was one of my friends in Blockcircle, and he needed help with one of his colleagues, and they wanted to onboard like 8+ figures of fiat into stablecoins, and they had no idea how to do it, and they didn't want to use a centralized exchange. And we were like, okay, here are some over-the-counter options. Here are some reliable, desks that are over-the-counter that can offer block trades, and they can offer you like, institutional level on-ramping. All of that is going to be reflected here. This is why I like this custom metric, because this custom metric tracks and flattens all of that into one metric, into one number. But the rest of the people are just going to go into Coinbase and Kraken and deposit 5, 6, 7, 8, 9 figures and then they're gonna Kraken and Coinbase are going to work with Tether and work with Circle to issue the stablecoin equivalent of those dollars. And that's how we're going to see this explode, right? What I would love to see is for this to go up to above a trillion. And that's how we're going to get to 120, 130, $150,000 Bitcoin, or Ethereum being above 10,000, or Solana being above 1,000. I don't think we have enough capital right now to go around. That's my only that's my concern. Like I like this. I love seeing this, that it's clearly upwards. But what I would like to see is I would like to see the rise going higher. I want the slope to be higher, right? The rate of it rising should be higher, especially at this point. Like, to me, when I look at this on a monthly basis, our issuance was going up 5%, and then it was going up 15%, and then 21%, 16%, 18%, 9%. So it's going up 22%. So the rate of issuance was rising by at least 5, 10, 20, 30%. Now it rose 2%, 3%, 3%, 4%, 5%. See, that's my kada. So that's a little concerning to me. I don't like that. It's better than nothing. So I definitely would like to see this rising faster. Okay. So no, I think absolutely we're gonna have an altcoin boom, but this is similar to Connor's question, is whether or not we're gonna have another bull market like we did in 2021. Because the bull market in 2021 was nothing like the bull market in 2017. Like, the bull market in 2017 was unbelievable. It's unbelievable. Like, you could put in 10,000 and it could be seven figures in a month. You could literally we experienced 100 to 400 X's within 60 days. And like, the vast majority of what I've experienced in crypto is the majority of your gains are going to come in 90 days, right? And they come in 90 days right after Bitcoin breaks its all-time high. It's happened consistently in the last 15 years. That's what it's done. It always breaks its all-time high, and then you have altcoins going up by unbelievably ridiculous numbers within. There's always that 90-day window after, and as long as you have some exposure for the 90 days, you're good. But it's much better to have exposure before that, so then you can hopefully anticipate when that 90-day window is, and then you'll experience even higher. You might experience like 2, 3, 4, 500, 1,000 X's. Like, that's what we were seeing in 2017. In 2021, it was a lot harder to hit 300, 400 X's, right? And we hit a few, but like it wasn't as often as you could see back in 2017. And I think what I'm seeing is that people in crypto, there's like the baseline knowledge and understanding of the market itself is higher than it was back then. So it's like the average intelligence level has gone up as time has gone. And that's a very important consideration, because there's so many ways to make money, but you just have to make sure that you're not just following the herd and like blindly following what some kind of content creator influencer is posting on YouTube, or some KOL who has a bad reputation and always is known for dumping on his or her followers, because that phenomenon didn't exist back in 2017 as much. It wasn't as pronounced. You definitely saw it, but it wasn't as pronounced and as publicly, exposed as it is now. And that's what I mean. Like, the base level of intelligence is like much higher now. People understand the market, or I think they think that they understand the market, and they operate under the assumption that they know exactly what's going to happen. And I think that's why a lot of people have been wrecked. They're just assuming that they're smarter than the market, and that they can time the market and they can time their entries. And that's not the goal. The goal is to just get your profit and get out. That's what I've always done. And I didn't do that in the past, but that's what I've done recently, and that's worked well for me. Everyone's got to find their own method, but that's worked well for me. Like, for me, the momentum trading engine has been it's just incredibly useful, because it helps me do large trades, large positions, and it helps me just clear out a lot of the noise from what I'm doing. Like, for example, the momentum trading engine said to go long at 63,000 for Bitcoin. And then right when it hit 2.5%, it closed, right? Because this is using configuration 4 is using, I was using like 2.5, 3x, sometimes 4x, sometimes 5x. But I like to trail these positions. So when I'm in a little bit in profit and I feel confident in the long or confident in the short, I trail the position. And that's fantastic. Like making 5%, 6%, 7%, 10% on a long or a short a few times a month when you're trading large positions, large size. I don't know what else you could possibly ask for with some portion of your portfolio. And then the rest of your portfolio, you have them in speculative micro caps and small caps that seem to be doing well. And that's just how I've done it. And it's worked. It's worked really, this has helped me so much, you know? So that's been my sort of my view on it. Let's see what else. What are some other questions? Oh wait, I think I skipped a whole bunch of questions. Oh no, I didn't. Okay, so can you make some comments on short trading from your massive experience? BTC has continued to behave as a market leader and be in a long uptrend. So of course, shorting is harder than longing, but is there a way to capitalize with shorting sectors and markets since they fizzle out, or is this too risky or not available? Yeah, no, for shorting, the momentum trading engine configuration 1 has done a really good job of, I would say, predicting when it's a good time to go short. So I would definitely use that. The reason I did really well on the shorts back in like late 2022, and I was shorting Solana all the way down to below, it was like, I mean, shorted it like it was like below $10, right? And the same thing with FTT is because it broke like a longer trend. So if you give me a specific asset, then I can tell you like when would potentially be a good time to flip, you know? But usually what I would look at is, let's say, so let's look at some shorts. Let's look at what would have been some good short opportunities to go bearish on, right? So if I'm looking at Solana, for example, even just this, even just using the 8-week exponential moving average on Bitcoin. So just using this, using normal candles, not Heikenhashi. Anytime in the past where it touches, anytime that it touches the, here, so anytime that it goes and it breaks below the 8-week exponential moving average, it's usually a very good time to do a swing short, right? It doesn't mean that you're going to be able to time it perfectly, but it actually works fairly well. It works really well. So if I look at this back, let's go back to like 2021. And let's say for Bitcoin, how would I have shorted this? You could have shorted it right when it breaks, and it clearly breaks below the 8-week EMA. So, or it even just wicks to it. So this could have been a good time to go short, and you could have profited just from that. Another time to go short, and then from here you would go long as it reclaims and retests the 8-week EMA. Another time to go short is, this could have potentially prepared you for a short because you're seeing some weakness here, and then you're seeing a reversal. You're seeing a lower high, higher low. That could potentially be a good time. But this is using traditional candles as well. But another way is look at the other indicators that I have. So like the ones that I have on the screen right now, these are good times to, these are very good indicators to use when you're trying to look for short opportunities, especially. So for example, like what we were just talking about, you clearly can see that every time that we've had a push up, we've been rejected, right? So a good time to go short would have been anytime that the RSI is above 70. that could be another good time to do that. That could be a good time to go short on. And then you can change this on the weekly and the daily. On the daily, it'll be a little bit more defined. So anytime that it's above 70, that's 70 combined with the momentum being above 100 and Bitcoin hitting a resistance level would absolutely be a very good time to potentially look to open a short. And it could even just be a hedge short where you're trying to have a diversified position. If you don't want to be completely naked and you want to have some kind of, delta neutral basis where you're going long on your Bitcoin spot, and then you're also covering your position by going short. This is like ideal for me. Like these are very good short conditions. And then once you've hit like 5-6% profit, then you can trail your position using a trailing stop loss. And all of the platforms that I've mentioned that I use all have trailing stop loss. But if you don't want to use them and you just really want to manage it yourself, you can. You can just monitor your position with your eyes, right? So that would be my view on it. And that's it. So I would say you see like a break in daily and weekly and monthly, depends on what type of trade you're doing, if it's a scalp short or a swing short. But I would say a breakdown of Heikin-Ashi candles turning red would be one indicator, combined with you breaking below key historical simple moving averages, exponential moving averages. Another is using leading indicators, like technical indicators like the RSI, using leading lagging indicators like the Blockcircle momentum one, using a combination of moving averages. And you could also use like a stochastic oscillators. Any type of oscillators are very useful because they're a lot more predictive in nature. So they'll help you predict, but it's good to use lagging indicators because then you can actually confirm that the trend is in fact flipped. But all of that is in the momentum trading engine. So I would say look at the momentum trading engine more closely and you'll see that the indicators that we built in for shorting, for example, is we're using, you see we have RSI here, but we say go short when the RSI on the 14-day is above 38, right? And then you can have multiple time frame shorts as well. And then you can choose whether or not you want to use Heikin-Ashi entry and exit conditions, whether or not you want to use higher lows or lower highs. And then I also have slow stochastic here built in. So we can say when slow stochastic is slope or is rising or declining by a certain percentage and all these other conditions are met, then you can go short and you can test it. Another thing I'll mention is that at the end of it, if you do short only, if you feel like the entire macro market itself is overbought and you feel like, okay, we've already been overstretched at this point and I want to be biased short on the momentum trading engine, you can do that. So I'll give you an example. So if I'm looking at this on the 8-month, so this is like a very simple way. This is a very simple way to see whether or not you have a potential change of trend. Okay, very simple way. Look on the monthly. Anytime that you see on the monthly, the Heikin-Ashi has flipped from green to red or is starting to turn over, where you have a lower high and a higher low, or preferably a lower high and lower low, that's more of a confirmation indicator. That could be a very good time to go short. And yeah, you may not be going short right at the market cycle peak, but you are going short at 50,000 all the way down to 15,000 if that's how aggressive you want it to be, or you're going from 50,000 all the way down to 27,000, right? I mean, that's a 50% profit without using any real leverage and not using any kind of margin. That's just using 1x. So it's a 1x spot-based short, which you can do with any exchange, as long as you're having collateral on both sides. Don't forget, if you want to short Bitcoin, then you have to have collateral in USDC or USDT. So yeah, so that's one indicator. Another way, if you want to be more aggressive, so that's more conservative. If you want to be more aggressive, you could just use the weekly, right? At any time that you have this, so this is like a perfect example of what I'm saying, a lower low, higher low, you can go short. and you can go short from 36,000 all the way down to 28,000, and you can have a trailing stop loss and just ride the position low. And whenever you're seeing it flip or it's starting to flatten, then you can exit, or you can just keep the trailing stop loss. I would be very careful doing a short here because you're still closing weekly above the 8-week, but you can see that there's a reversal of the trend. I mean, it's very clear. And you can also see the volume. So if you have declining volume, you have price action is bearish, right? You have declining strength of the trend, right? As you can see here. And you have momentum shifting down. Those are 4 confirmations that it's a good time to go short. And then you can do the same thing on a daily. So those are all ways to look for shorts if you really want to be, and it works. I've done this and it works. Can you please elaborate on how to know when to close a position when using the trading bot on Solana? I went long on 144, but closed 50% of my position. Yeah, that's good, man. I mean, you went long. That's excellent. And you closed some of your position. I mean, that's up to you, right? But I think it just depends on like really how aggressive you want to be. I mean, to me, we're all young. Like, I know there's a few grandparents in here, but I think we're like 99.9%. We're all relatively young and we want to take some risk. We don't want to be too conservative, right? We want to take some risks and like go for it. So to me, I would say exactly like what I just explained recently for banana. For Walter, he was asking me about when to go long and how to set a trailing stop loss for banana, and I was looking at the numbers on the 1 hour, 4 hour, and 1 day. But for Solana, for example, you just have to look at the levels. So if you're ever in a situation like that, and you just ask me, Sam, and I can help you. But let's look at Solana, right? So you open up a long at 144. So that is right, basically right here. And that's good. So that was a good long. That's from the momentum trading engine. There was a very important level here broken. And we closed the daily above that level. So we didn't just wick above it, but we actually closed above it. And it was a bullish, very clear, defined bullish candle with a strong continuation going into it. And then you open the short right into the continuation, which is awesome. And yeah, and of course, brother. I mean, you're not old. I know how old you are, and you're not old at all. Maybe I'm biased, but I still consider myself young. I mean, so yeah, so you're right here. You're buying into that strength. Now, obviously, there's going to be a huge amount of resistance here that you're seeing at 158. So that would make me a little nervous, and we've already wicked it. And I would say if you're looking to set a trailing stop loss, what I like to do is I want to be able to look at this more on like the 4 hour, because if it's a 1 day trade, then I try to look at this on the 4 hour and see, okay, how close and how tight do I want to set the trailing stop loss, or if I want to take profit on it. But you can see right now that there's a lot of movement here, right? And in the past, there's a lot of movement between 148 and like 140. So I would probably be a lot looser here with my trailing stop loss for Solana. What I like to do is once I'm in like 5, 6, 7, 8%, 10% profit, I'd set a trailing stop loss at 1%, 2%, even 5%, depending on how aggressive I want to be or how closely I want to be managing it. Or I just monitor it and then close it when I feel like the market's completely overheated. But you could see that in the past, when we've reached this price point, RSI is already at 73. And in the past, that's reached the market top. I mean, that's like the local top, you know? So it's like we have a top here, we have a top here, we have a top here, a top here. We're already at 137 on momentum. So we're nearing, you know, So to me, that would be how I would manage it. Is next time just ask me, and and I think what I would have told you is I would have told you to just be very careful if it falls right below 152. You know, because I would be taking profit going into 158 because you're getting a lot more liquidity there, and you're going to hopefully experience less slippage. More liquidity, less slippage, more volume is what you want. So it's converging right here into a little triangle, which makes me a little nervous too. If I was if I was still in that Solana long, that's what would make me nervous. But also, what I like about the trailing stop loss is I can just forget it. I'm like, it's already locked into profit. I'm feeling great. I'm like, I can go to sleep. I'm good to go. I'm not concerned. Um, does that explain? Does that hopefully answer your question, Sam? Okay. Now let's look at other questions. So, is there a way to monitor and get alerted when a new L2 or blockchain has a 20 to 50% rise in bridging assets? I want to build this. I tried to find this data before. I was not able to find this data in a way that I could consume. I think there are a few data sets that you could use um, that allow you to be able to see inbound, outbound bridge transfers. But I think the only real way is to actually show you is to go to every single bridge and connect and understand exactly how much volume has transferred between one blockchain to another blockchain, because you don't actually know where that deposit has come from, especially if they're using some type of intermediary which is private, like a centralized exchange. And if you're using like a Coinbase or Kraken as your form of bridge, then how are you going to be able to actually have any form of view into where the coins are coming from or going to, right? There's no, I mean, because you can't correlate that asset to the origin. So there's no clear defined origin and destination. So the data I've seen, I haven't been really happy with because it's been mostly manufactured where like they're just inferring. They're like, oh, because I can go into Etherscan and I could see, I mean, there's no question, right? I could go in and I could see exactly what's going in, but you don't really know where it's coming from. So I don't know how much is going into Bitcoin, into Ethereum from Solana. And I don't know how much is going from Solana to Ethereum, like definitively. I can make like projections or estimations, but it's not very accurate. Um, I'm trying to think of another way. Mm, yeah, like there's these, right? So like there's like there's like large holders net flow to exchange net flow. So it tells you like how many whales are depositing or withdrawing from exchanges, right? It's the same concept. It's like how many whales are bridging assets into Ethereum from Solana, or from Solana to Avalanche, or from Arbitrum to Optimism, etc. And that data is like very proprietary. And these bridges that I'm showing you here are not gonna, it's not available everywhere. They're not going to show you that data as much. Um, some services do though, but most don't, as you can see. I'm trying to find this data and it's not available. If the data is available and you see it, let me know. But I think most of these bridges would never disclose that type of detail. Um, the other way you could do it is you'd have to use like annotations, like address annotations, where like if you go into Etherscan and then you log in. So one second. And if you log in and you go in here and you basically choose, they have annotations. So I'll give you an example. But even then, that's not going to be an accurate way of doing it. Um, that's the problem. But it's better than nothing. But here, I'll show you. So not node tracker. There's an actual here. 1 second. I want want to find it for you so you can see it and you could use it. So there's Label Cloud. So they keep renaming it, but basically this is an annotation tool. And this allows you to be able to see how much is coming from each protocol. So if I type in Solana, I see there's no Solana. But if I want to see like Alameda Research, I can go into Alameda Research's accounts, right? And these are all manually annotated and reviewed and approved by the Etherscan devs. But I could say that this is an Alameda Research wallet that was last used 497 days ago, right? And what you could do is if you have the annotation or the label for a wallet that belongs to a specific bridge, that belongs to a specific blockchain, then you can relate them together and say, oh, Rocket X Ethereum wallet X deposited this much, and then Rocket X Solana wallet Y, deposited this much, then we could potentially infer that there's a relationship between those two, right? Hopefully you're seeing there's like a million questions and holes that I could poke at that. But that's my view. Now, really curious on your opinion when the bull market will be over. I still believe that the bull market's going to be over at the end of like mid to late 2025. That's just my view, because in the past, so like when I look at Doge, let's look at Doge, for example. Let me pull up I had a nice little, yeah, there you go. I had this nice little chart that I've been tracking. And it's funny because we broke the downtrend that I've been tracking for a long time. Exactly what I was hoping was going to happen. If we're at 23 cents in like January, February, that would be amazing. Because even earlier would be incredible. Because in the past, when Doge breaks its all-time high, we have basically an 8-month push-up until the market cycle top. So if we break the all-time high for Doge in like November, then that could mean that we potentially have market cycle peak in like June. But if we don't break it till February or January, then maybe we don't break it. Then maybe we don't have a market cycle peak until basically like September, October, November, right? Maybe the end of 2025. But this could absolutely extend into 2026 as well. I mean, we could have a market cycle peak in January, February 2026. I just think we have plenty of time. 99% of my targets have finally been hit, so I'm feeling very good. I just really would want Bitcoin dominance rising to 60 to 65%. I really would love to be able to have this rise much higher, much higher. And I really would love to be able to have stablecoin dominance just peak one more time, and then we can finally have a nice push up. That's just what we need. I feel like that's what we need. We need like we have a nice run up on the stablecoin dominance, and then we can just finally enter bull zone. Like we did back in like November 2020 is when Bitcoin really started taking control, and dominance was around like 5.5%, 6%. But obviously this is going to rise considerably because we have a lot more stable coins being issued now than we ever have. And I only chose these three because it chooses the common denominated like time period. So it chooses the earliest common date between these three. So if I add like GUSD or BUSD or FDUSD or any of the other stable coins that were just created in the last 2 years, then we won't have data that goes back 5 years. Right? Hopefully that explains it. All right. What are some other questions? Samco, can you please share your thoughts on the rates cuts? Oh, Sam, you're on the stream. Can you please share your thoughts on the rate cuts in China and the stimulus measures? Will it have influence on crypto? Absolutely, it's going to have influence on crypto. I mean, this is what I was talking about before. When you have Sam, are you still on? You probably are, knowing you. Which is good. I mean, it would be awesome if you're still on, because then I can ask you questions on exactly where you're. Okay, brother. So let me show you a few things, make this more interesting. Um, in the past, what I've liked to do is I like to see where's my Bitcoin. This one. This one metric also has been beautiful for me. So what this metric shows me is the price of the value of Bitcoin relative to the value of the M2 money supply. The M2 money supply, just think of the money supply in the United States of available dollars for consumption and for companies to use and access. It's measured and tracked in a metric called M2 money supply. Okay. Now, what I like to see is the value of Bitcoin relative to the value of the money supply. Because if you have higher money supply, that means you have easier way to access cash. If you have an easier way to access cash, then you are generally going to be able to speculate on more risk on assets like crypto. And if you do that, then you're obviously going to be driving up the valuations higher. And you're going to be hoping that the value is going to appreciate in value over time, right? And what I've noticed in the past is we've reached a very clear peak at around like 0.06. Okay. And in the past, it was 0.01. But if you remember, we issued 7 trillion into circulation and tracked by the M2 money supply. And it was like at like 24 trillion. It was like unbelievable, right? During COVID. And so the level I like to track now is still 0.06. So no longer 0.01. 0.06 to me is a level that is very important to track. And that's like a very important level of resistance because this marked the Bitcoin market cycle top back in April. And then it also marked the Bitcoin market cycle top back in November of 2021. And again, going into this year, it marked again the market cycle top at 0.07. So to me, when you're having this go higher, that's very good for us. Unfortunately, though, we haven't broken out of this trend. Okay, so Bitcoin has not outperformed the M2 money supply. So essentially, what I'm trying to explain, the rate of issuance of money into circulation has outpaced the rate of Bitcoin's price going higher. And that's usually not what you want. You want, if more money is coming into circulation from the government through stimulus plans or through asset forfeitures or through any type of quantitative easing, right? Then you want some of that money to shift into crypto in some way, to have some exposure to that sector. If you don't see that phenomenon, then that's not good for crypto, right? And we have not seen that phenomenon since March. Right now, in the last 2 weeks, we've been seeing a trend higher, but we haven't broken above this level. If we break above, we close the weekly above, then I would feel a lot more bullish on crypto as a whole, like I did back in October, right? Because you could see in October, it was just continuing to trend higher, all the way up from 0.02 all the way up to 0.07. So now when you ask me about China, so China is like, they're basically, it's like just conjecture at this point, but they're like, you know, reflecting upon the possibility of issuing $160 billion into their circulation and to try to stimulate the real estate economy and try to drive up demand and so forth. I think that's excellent for us. Like that's just delaying the inevitable recession, which I'm expecting is going to happen in the next few years, in the next 1 to 2 years. And when you have countries who total global production is as much as the United States, with 1 billion+ people looking to use quantitative easing by issuing money into circulation and trying to stimulate demand, that's what you want, right? We want some of that money to go into crypto. And we want some of that to translate into the Federal Reserve doing the same. The Federal Reserve is not yet quantitatively easing. They're still quantitatively tightening. but they've pivoted their interest rates. They've reduced their interest rates, which is helping money circulate and help people access capital at an affordable rate. But um, they still are tightening their policies, right? And they're not yet completely loosening the reins, right? That's what I'm trying to say. So hopefully that answers your question. If it doesn't, please ask. Okay, now this last question from Zaj. Mind elaborating on a scenario post-run that you think could happen? Oh, this guy, David Hunter. I've seen his projections. He's just sort of, it's funny. We'll be in a global bust next year, and oil will fall to $30. I think oil will rise to $500 by the end of the decade, or early next decade. So that won't start that move up until 2026. Next year, we'll see a deflation, but then a big inflation cycle. Wow, this is some really incredibly high level predictions this guy's making. Now we're going to see a $30 oil. So I think he's expecting a recession. I think that's what he's not saying it. Probably doesn't want to be held accountable for it. But there's no way you can't have, where's my, yeah, you can't have the price of oil go down 50% without having a recession. I mean, that's exactly what happened in 2020. So he's expecting oil to go down 15%, 31%, 48% in 3 consecutive months. That's the only way that it's going to go from $67 to below $30. So he's expecting a recession next year, which, yeah, it's absolutely possible. I showed it to you. I mean, I showed you the econometric variables that very clearly demonstrate that anytime in the next 6 to 18 months, we could have a recession and it wouldn't be unprecedented. No one should be surprised if that happens. I just hope we have crypto run up before that happens. You know, hopefully that happens. Now, but let's look at the price of oil without all this noise. And let me see. If I delete this and let's look at this on the weekly. So the problem right now is that we're literally at a 2-year level of support here, right at $67. I mean, it's unbelievable. So we went from $130 all the way down to $67. We're already down 50%. And we keep hitting this level. Now, if we hit this level, he's expecting it to not go, he's expecting it to collapse. And that, you know, basically the 6th time that we hit it is going to be the time that it breaks. Which I get it. I mean, I absolutely, I could see that potentially happening, but so far it's not happening. So far we're potentially seeing a little reversal here, especially if we can close the weekly above the 8-week, and then we can close above the 60-week and above the 200-week, which is rising. I think I would be a much more bullish. I don't like the fact that we closed below the 200-week SMA. And at the same time, all the waves have actually flipped bearish now. Because in reality, we never did that before until now. So that's definitely not good. But I wish we didn't have this like weird data. Because you see in the past when we did that, when we broke below the 200-week, that's when we went from $68 all the way down to below 15. But you see here, we had a false breakdown back in 2018. We broke below, right? And we didn't, and right here, we broke below as well. So why is this time equivalent to the beginning of 2020 compared to the same as it was in 2018 and then 2019? I think it's potentially the same as 2019 when the Federal Reserve pivoted and reduced interest rates. This is right before the interest rate reduction from the Federal Reserve was in January of 2020 because they reduced the interest rates after. Um, so yeah, I don't know. I don't think he's that's my view. So I'm viewing it a little differently, but uh, I'm just going to wait until the data shows me what to do and how to react. So I think I've answered everyone's questions. But we still have some people on stream. Are there any questions you want me to look at? Are there any assets you want me to look at? Are there any coins you want me to see? Anything you want me to examine, research, investigate? Are there any trades you need help with? Please ask. Look at 0x0. Yes, of course. Oh, my good old friend 0x0. So, wow. 0x0 is now being tracked by crypto. That's good. I like that. I definitely like that. I also very much like this chart. I like that it's broken out of its downtrend the last 6 months, and we've had a continuation going into this week. Really, at any time period that you look at, we've broken that. That's excellent. I think I'm not seeing that. Why am I not seeing any volume? Oh, because sometimes through crypto they don't give you volume. And I like that the 8-week is trending higher than the 30-week and the 60-week. We still haven't broken above the 200-week, which is around 24 cents. I'd feel a lot more bullish. Or this is a 200-day. I think, yeah, it hasn't even existed for 200 weeks yet. But yeah, but we're still above the 8-week EMA now. So that's good. And we're nowhere near overbought. We're still below zero on momentum. I just don't want to be, I wouldn't want to be rejected here on momentum at zero. Because that's usually what happens with these assets is they get rejected as it tries to approach and break above zero. So it hasn't broken above zero. It would be nice next week is if this can flip above 20, above 10, you know, then I would feel even more bullish on it. I mean, I love the project fundamentally. There's no questions or concerns about it. Other than there was a few things they did immaturely in the past. They're very sensitive towards constructive feedback and any form of actual productive recommendations, like you know. Um, but yeah, I'm still in it. What are also your thoughts on the project? Yeah, so I think I've shared my thoughts on it. Um, I wouldn't be selling it at this point. Uh, you are potentially hitting some resistance here, though. So if you've just been holding it and you want to take some profit, it's not a terrible place to take some profit, or at least set a trailing stop loss, because those would be the levels I would look at. So I would definitely see, and you see it's already flipping on the daily. So you have a lower high, and then you have a lower low, and then a lower high and a lower low for 3 consecutive days. And it's already flirted below the 8-day EMA. And it's flirting, and I'm sure if we do the 10-day EMA, it's going to be below it. And it's below the 100-day or the 200-day EMA. Yeah, I'd be very careful actually here. If you don't want to be holding this for like another month or two, I would be. It's hitting its June high now. I would be careful on the daily. On the weekly, it's strong. Looks good because it already went down. You know, if you remember, it went down. It was like 70%. Went from 53, no, even more. Yeah, 86%. Yeah, it went from 7 cents all the way up to 20 cents already, right? So it's gone up 3x just in a few weeks. So it's hitting some weekly resistance. It's hitting some daily resistance. It's starting to flip bearish on daily. And then look at the 4 hour is even worse. I'd be careful here. Hopefully that helps. I've also been buying gold, silver, and platinum coins for diversification for the last several years. I think it's fine, man. I don't know. Those are not like platinum is interesting for sure. There's no question about it whatsoever. Um, I mean, yeah, I like platinum. Platinum is good. Um, Platinum is good. I think it just broke its. Did it break its all-time high? No, very close, but it hasn't broken it. It hasn't broken it. Wow, its all-time high was even higher, 2,200. It looks like it's just been generally just been consolidating for the last 10 years between 1,800, brother. And see, like, if you're going to be accumulating this over many years, I would just accumulate Bitcoin at this point. And then whenever it's gone up a lot and it's like above its 8 month EMA and like 10-month EMA, or once it's 3 month EMA using Heikenhashi flips red, you could just sell it and then just buy it again when it flips green. So it's like basically one trade every 2 years, you know? Um, that would have made you a lot more than I think the risk adjusted returns would be much more attractive if you're looking to just buy rather than just accumulating between 800 and 1,000, because then your return is really only 20%, you know? But I know why you're doing it. I know you, and you're doing it for you're diversifying your portfolio, and you're trying to make sure that you have assets that are not correlated to Bitcoin. I mean, of course, it makes sense, but this also doesn't really offer like that attractive financial returns, though, because it's just been range bound and hasn't really done anything. Hasn't really done anything. That's like my view on platinum. Now, if you're looking at palladium, that's a lot more interesting. I don't know if you've looked at that, but palladium is a lot more interesting. But now, palladium is even more interesting now than ever because I'm looking at it. It's hitting a very important 20 years level of support here. And palladium has actual utility. Of course, platinum does as well. But palladium has actual utility and is going to potentially project it to have some demand for it going into the future. And when I'm looking at this on the monthly, I'm seeing a potential breakout. So this could be interesting. This could be interesting fundamentally and technically. The thing about gold, though, that I like as well is that fundamentally, Tony, when you're having all of these wars that are going to potentially escalate, in the eyes of a potential imminent collapse and escalating wars and looming recessions and geopolitical risks and global macroeconomic uncertainty, and you have financial markets that are unstable, right? So you have like the five factors all at play. People typically flee to gold, right? Um, so it's good to just have some exposure for sure, and it's generally been non-correlated to Bitcoin and crypto. So yeah, I think gold definitely makes some sense. I could justify it in different ways. Silver, the problem, I like silver as well, but the problem with silver is that it's obviously supply is hoarded and controlled by like a consortium of banks and like the cartel of Chase cronies, you know, and I think probably gonna piss off a few people by saying that, but that's just the honest truth. And all the data shows that. So, um, but yeah, I mean, look at gold. I mean, it's broken every single level I've set here. It's incredible. It's like on a tear. I mean, I could easily see this. I don't see how this wouldn't go up maybe like 3x in the next 10 years potentially. The next 20 years, this could go up 3x. You know, I mean, you potentially in the next 20 years, you could potentially have this at 10,000, which is not something I would have ever expected. You know, but some people claim that when Bitcoin reaches, escape velocity and people start using it as an actual global reserve asset, then some of that capital of the 5 trillion that's being held in gold is going to shift to crypto. But I don't think that's anywhere near like likely to happen in the future, because in the near future, because Bitcoin itself is inherently incredibly unstable and volatile, and you can't use it as a reserve asset when um, it goes down 80% every 4 years, right? It's like that's what I like about gold. It doesn't go down 80%. But one thing I will say though, brother, on gold, it did go down though from like 1900, still went down 46%. I mean, for what people hold up gold as the absolute canonical definition of a reserve asset, still went down 46% when things were uncertain in 2011 to 2014, which is interesting. I mean, that was post recession. That was post recession. That was post recession market recovery. So, of course, it makes sense to offload at that point, but that is still interesting to me. It's like really not that attractive of a reserve asset long term when the market conditions improve. It's only when the market conditions are inferior, then it makes sense to accumulate, you know? But you know what? Also, Tony, we've hit RSI on the monthly is already at 90, close to 90. And the momentum has peaked already at 190 on the momentum indicator, which in the past almost 200 years, that has marked the top. That has marked the top. When you have the momentum indicator at 190, has marked the top. And the RSI being above 85, 89 has marked the top. See? And then it corrects. Then it could continue also. That was in 74. 1, 2, 3. Oh, you're very welcome, brother. Oh, that's very nice of you to say. I love that. That's very, very kind of you. Thank you. It's taken me a long time, many years. Hopefully that was helpful, everyone. If there are any questions, any other questions, please ask. And I really enjoyed the stream. That was good. Hope you guys found that all helpful. And talk to you all. All right. Take care, guys. Bye.